we've got CNBC's Christina Partsenevelos, star analyst Bernstein Stacey Rasgon, and Nvidia shareholder Bryn Talkington, all standing by. Christina, you set the stage for us first.
The stage is going to be a little bit trickier, the setup this quarter, and that's due to the recent H20 chip ban affecting China sales. The company had already said they're taking a $5.5 billion charge, but CEO Jensen Wong warned last week that export restrictions could actually cost around $15 billion in lost sales on top of that write-down. Even if it's a temporary blip affecting the July quarter, it is temporary, consensus doesn't really reflect the potential sales drop. Full-year consensus, we're going to show you a chart right now, has really only declined about $5 billion in recent weeks with no big moves after May 20th, which implies analysts haven't really factored in the potential loss in sales. The company also faced supply constraints around its server racks earlier in the quarter, with manufacturers struggling through the technical transition from Hopper to Blackwell architecture. However, recent reports, specifically coming from Asia, even FT reporting on it yesterday, suggesting suppliers are getting back on track, which would really help the July quarter. Unlike Nvidia's typical patterns of beating by $2 billion and raising guidance by another $2 billion, many this time around aren't expecting the usual fireworks, Scott.
Christina, thank you. Now, let's bring in Bernstein Stacey Rasgon and CNBC contributor Requisite Capital's Bryn Talkington. It's great to have you both with us. Stacey, you think this quarter is going to be, in your word, messy, don't you?
It probably will be a little messy. So, she's right. The estimates do not broadly reflect the impact of the China ban. Look, the sell-siders, unfortunately, I'm guilty as well. We're kind of lazy sometimes, and numbers have not broadly been reset. So the headline numbers, though, they may guide light. It's possible. In the quarter, the gross margins are going to miss because the consensus numbers don't reflect the charge. I think this is known. Like, the buy side's kind of there. I don't think that a guide below consensus on the back of the China stuff would be that problematic. A lot of this is going to depend on what they say about the rest of the year. I mean, they're trying to work around these China bans. So the question is how much of that revenue might actually start to come back as we go over the next several quarters. You mentioned that the supply constraints on the racks for Blackwell seems to be freeing up, and so can that drive upside into the back up? I would say in general, though, like all the China stuff, it's kind of a blip. It's not really that structural in the medium term. I would say that the outlook for CapEx now is actually quite a bit better than it was, say, 3 months ago. Again, the supply situation in the back half looks better than it did. I'd say worries about peak CapEx this year, and CapEx supplies next year don't really seem to be like all that big anymore. Like, CapEx outlook looks really strong. And I can't imagine that anybody, regardless of what's going on with the China stuff, that you're going to come off this call feeling, like less bullish about AI than you were like going into it, given what Jensen is likely to say. So a little bit of a messy quarter, but I think the outlook's still okay.
That's all fair. I mean, and Bryn, we put together a list of what we think are the biggest issues for investors like you. Stacey obviously hit on them, as did Christina, with the maybe revenue miss because of the H20 issue in China. But the other issues to pay attention to, as Stacey was alluding to, demand outside of China. Is there still a DeepSeek overhang? Maybe we'll learn a little about that. New Middle East partnerships. Jensen Wong was just with the president in the Middle East. How significant does he see that being? And then, no fault of the stock or the company, there's a high bar. There's now a high bar going into this print. What was kind of a ho-hum has become a, oh boy. I mean, the stock's up 40% since April the 4th. What does all of that mean for what happens tonight?
So if you look at June of last year, the stock is flat from there. And so going into the print tonight, to your point, moving off from 100 to a little bit lower than 100 to 136, I think expectations have been priced in. The China, I feel, is very priced in. We've all been talking about this. This is not a surprise. They've talked about it as well. I think of how to trade this because the stock has been range bound between 100 to about 143 as a peak since June of last year. I do not think the market is going to allow this stock to punch through that 143, 145 to reach an all-time high with these overhangs that both Stacey and Christina pointed out. So as you're looking to trade the stock, I mean, the option market says plus or minus 6 after today. If it goes plus 6, that coincides actually too close to that 145, which is that high level. And so I think you could sell calls against part of the position. I do think, though, from a demand perspective, Saudi is going to do 18,000 GPUs over the next 5 years. The UAE, those are real dollars. You hear ChatGPT or OpenAI is spending more. The hyperscalers are spending more. And so I think that the conference call will be the opposite of messy. I think that Jensen is going to delight investors. He's going to talk about all the successes in the Middle East, plus. And so I think, just like 2018 was a great year to add to NVIDIA, I think 2025 also is going to be a good year, because I do not think at this point it'll punch above that all-time high and then start off just because of the overhang we have.
There's the Kramer interview, too, at 6 o'clock tonight, which is going to be very interesting to listen to in the wake of the earnings. So, Stacey, what about the issues at hand beyond China? The high bar going in, stocks up a ton in a very short period of time, and still wondering about a DeepSeek overhang, if any. But address the stocks move first and what you think that ultimately means for where it might go after the number comes out.
I think you're right. I mean, if the stock was still 110 going into the print, it's easier. It's had a big run over the last month or so as some of this stuff has been digested. And it does make the very short-term tactical setup maybe a little bit trickier, and I understand that. Again, I think the medium and long-term outlook here still looks really good, but yeah, there'll be some nerves, going in and through the print tonight. I think that's true. Now around the DeepSeek moments, it's funny that the right move, when the DeepSeek news came out, I guess in January, was actually to sell everything. I suppose, even though the only thing we have seen since DeepSeek was announced was compute demand go through the roof, right? So I still hold to the view that the DeepSeek and more efficient models and more, it's good for adoption. It's good for the AI ecosystem. I think it's good for NVIDIA. So from a fundamental standpoint, I don't worry too much about DeepSeek moments. I think we need those moments. We need efficiency in AI, in compute, in order to drive adoption. We are waiting. I think they're supposedly waiting for the announcements of their new models. I think they've been delayed a little bit, frankly. But yeah, I guess we'll see what happens. But I still feel like it's a positive thing, not a negative thing.
How are you thinking about how Jensen Wong has sort of navigated Trump and the administration? Yeah. He shows his face out in the Middle East. He gets some business out of it, obviously, but it wasn't lost on anybody that he was there, the president included, because he said as much as he singled out the fact that Tim Cook wasn't. But how about that relationship and what you think that means for this company going forward?
Yeah, so for now, that relationship looks good. And, it's Trump, so we'll see. But for now, the relationship looks good. I think Jensen's actually navigating it very, very well. He got the diffusion rules pulled, which is actually a big deal, because if those had actually gone into play on May 15th, those have the potential to impact things pretty strongly right now. And so those are gone. He's got the Saudi deal, and we'll probably see more of those bilateral agreements that opens up some of that sovereign demand for him. And I'd say those Saudi and UAE deals are probably bigger than what would have been allowed under the old diffusion rules anyway. So yeah, no, I think he's navigated it really, really well.
Bryn, how would you address that? By the way, I mean, the stock going in is now up 1%. The NASDAQ is now green, and what's been a red day across the board, tech and comm services have been hanging in, and they are the only two green sectors. So maybe there is some at least tempered optimism going in after the significant move that we've had. But what about Jensen and the president?
Hey, I've never seen Jensen in a suit this much in the last 30 days. I think he's navigating it really well. I don't think the White House wants to see the leather jacket, and I think he's just navigating it, just incredibly. I don't know why Tim Cook would have even been there. First of all, it makes so much sense why Jensen's there. He got many good deals out of that, and he needs to cater to the White House, because to me, from a national security perspective, Nvidia is in the crosshairs of all of this between the U.S. and China. And so I think that's one of the reasons the market is not going to let Nvidia at this quarter take off again and start making new highs, because we know that very little has been done between China and U.S. in the trade negotiations. We've just done a kick the can and taken off the embargo. And so I still think the stock is going to be range bound. And once again, this will be a good year to pick up the name, because I agree with everything Stacey said. I think there are blue skies ahead for Nvidia longer term.
Bryn agrees with everything you said, Stacey, so we're going to let you go. There's nothing
She's the only
controversial
one,
that we could get into right now. So we'll see you soon. We'll see what happens, and I know we'll talk to you soon. Stacey Rasgon, Bryn's going to stay with us, and we're going to bring in iCapital's Anastasia Amoroso into the conversation. I know you don't think of this as a single stock story, but in the context of what the group may do at a time where the Nasdaq's up almost 11% in a month,
right.
Pretty extraordinary. So what does it mean?
Right. Well, first of all, Nvidia report is important specifically for Nvidia shareholders, but I wouldn't necessarily extrapolate what we hear tonight into the broader market one way or another, or even into the broader semiconductor or AI story. I think we're likely to hear that the AI momentum is continuing and it is broadening, which is a positive. I would be really curious to see how the company is navigating some of the tariffs and sanctions and export controls. So from that perspective, you can actually take some color from that. But I think what's really important here is that if you think about performance of the market, you have sectors like utilities, you have sectors like industrials, for example, that actually managed to be up 5 or 6%. Also software, AI software is up about 12%. So this is not the year where the only growth story that you have in the market is Nvidia. So that's why I say I wouldn't necessarily extrapolate whatever we hear tonight into the broader market.
Yeah, Bryn, how do you see that in terms of what this report means for the broader market, all these other spaces?
I think it's going to confirm what we already know, because what people should have been concerned about is last month when Microsoft, Google, Meta, Tesla all talked about how much they're going to spend, and if they would have been pulled back, I can guarantee you Nvidia would not be at 137. So we already know the spend is there. I think that there's so many. Look at CoreWeave. Like, that stock has just gone parabolic, which obviously Jensen and Nvidia have a lot to do with it. And so I think it's going to confirm that AI demand is strong. And I agree with Anastasia that we do have this broadening out where there's other things outside of the high beta names or just the tech names that have recovered off the bottom, and I think will continue to run. That being said, I do think the market really through July is capped out around 6,000. Like Nvidia, I don't think the market's going to let it punch through above 6,000. So I think we're going to be in this 5750 at the 200-day up to around 6,000 until we get some more clarity around inflation, yields, and most important, what's going on or what isn't going on with trade negotiations.
Well, you didn't mention taxes, deregulation, and all the stuff that, theoretically the market's going to start looking ahead to, right? It's not going to wait until the moment that we get there. And if the market is somewhat desensitized to the bark of the White House because it doesn't believe that it's going to actually get the bite, I mean, how many times do we have to go through this of I'm going to do this, tariffs to, at whatever percent, but then they come back in a matter of days. Haven't we learned our lesson on that yet?
Yeah, absolutely. I mean, I think myself included, we're becoming anesthetized when just literally 24 hours they will change course. I think what he's trying to do with Europe specifically is apparently those trade talks weren't going anywhere. So he lobs a tweet, and then the head of the EC reaches out to him and said, okay, we'll speed it up. And so I think we're all getting the game here. And so I do think, though, what are we going to get, and how long is it going to take Congress, the Senate now, to come back? And so that's where I think around deficits, around yields, around what the Fed does or doesn't do, we'll continue, though, to put a cap in addition to the lack of clarity. Because really, who cares about the trade negotiation between us and the Philippines? It really comes down to the EU, but China most importantly. And I think we're just so far off on a China deal that will put a lid until we get more clarity there.
You're not focused on the trade negotiations and the tariffs with the penguins?
Let it go.
I couldn't resist. I couldn't resist. Is there a cap on the market?
Look, we've run a long ways in a short period of time, so it's natural for things to slow down. But I actually, Scott, still see a lot of momentum potentially continuing further into the second half of the year. And I see a lot of factors that are still supporting this market. For one, this economy has been remarkably resilient in the face of everything that has been thrown at it.
Yeah.
And there's this chart, Scott, that looks at the hard data, which is actually what people are doing and spending and the jobs that they have, versus soft data, which is sentiment. And it looked like for a while that soft data was just plummeting, and maybe the question mark was the hard data was going to catch down with that. But that is the exact opposite of what happened. What actually happened is consumer sentiment has turned around. Even the manufacturing surveys have turned around, and now soft data has rebounded. And in the meantime, we're living through the second quarter with 2.3% GDP that is now cast. So that is a positive. And then in the meantime, the trade deal is working its way through the Senate and Congress, and I think that is a growth positive. If you think about me, I should have said the tax deal is working its way through Congress. And the tax deal is a positive as it has the potential to boost GDP growth by 1% in the long run, starting next year. So you add all of that together, and you also look at things like oil prices, which are down 15%, and wage growth, which has slowed down. That's an offset to potentially higher inflation from tariffs. So I'm not in the stagflationary camp, and I do think this market has supports, which, by the way, 2 weeks ago, about 20% of investors were bullish. Today, it's about 37%, but it's not half of the investors that were bullish to start the year. So I think this market is not tapped out yet.
You know what's interesting, Anastasia, when no one's talking about, at least outside of the White House? Rate cuts.
All right.
We stopped talking about the Fed because, I don't know, the consumer seems pretty good. The economy seems to be in a relatively decent place. And if you're going to dial back the tariffs at every turn and think that we're going to move on to other things, maybe it becomes less relevant to have a need. And if they do show up, it's for the wrong reasons.
It is less relevant, and we need the Fed if we need the Fed because the labor market has fallen apart. But clearly, that is not what's happening. It is rebalancing, it is softening a little bit, but it's not falling apart. The beauty of the situation is that if we need the Fed, they have the ability to step in and cut interest rates further. They also have that ability because inflation, core PC inflation this week is expected at 2.5%. Headline is about 2.2%. So they have the firepower to use it if they need it, but we don't currently have that need because consumer continues to contribute to the economy. And I actually think manufacturing may start to pick up because if some of these negotiations are successful and if companies are listening to the Trump administration, they're likely starting to boost their domestic capacity utilization. That's a positive for the economy.
You look at some of these retail reports, Brandon, doesn't seem like the consumer's in a dark place. I mean, we had, as Anastasia said, soft data report after soft data report suggesting that the consumer was going into hibernation, like if they weren't already there. And then you see some reports like an Abercrombie. And then you get the consumer confidence report, which finally reversed 5 consecutive months of declines. And you say, well, maybe not so fast.
Yeah, well, I mean, I agree with you. First of all, I talked about it with you, Steve, and I about the consumer confidence index last month was a huge contrarian indicator, and people should do the opposite of what it's saying because it always is lagging indicator. But I will say I think Abercrombie is more about Abercrombie. I think because you could also look at Macy's as closing 150 stores. And so I still think within retail, it's very specific within names. And I do think about, it hasn't made a difference, but, there's 40 million Americans that just are about to get a credit impact from the student loan debt. I mean, if you multiply that by the $500 a month that they haven't been having to pay, let's just see if that pushes through. But right now, the consumer's happy to spend on credit. Consumer's strong, and as long as 2/3 of the GDP continues to do that and everyone has a job, the economy will be in good shape. I mean, I'm not in the recession camp even remotely. I just think the market needs to digest itself, and we need more clarity before we punch above and get into all-time high territory.
Labor report coming up, too. Lastly to you, Anastasia, but you got to be careful into reading anything into anything that comes out now. Because what was thought to be in place before the China tariffs were rolled back is not the case today. So it's really hard to make an investment decision based on one report in this particular time.
That's very true. And also you have to think about not the backwards looking data, but what is likely to happen in June and likely to happen in July. And really the key determinant will be, do the trade deals get cut by the July 2nd or so deadline? I think the determination is there, as we've seen it with the UK, as we now see it with China. And I think we might also see it with the EU. So as long as the trade deals are progressing along with the tax deals, I think that's what's most important to the market.
Yeah, and we'll see whether the administration, too, is just it's run its course in terms of having the stomach to deal with a massive amount of volatility, not only in the equity market, but in the other markets that have made them nervous, quite obviously, at times. It's been fun. Thank you, Bryn. We'll see you soon. And we'll see what happens with Nvidia. Anastasia, thanks for being here as well. Anastasia Amoroso. Let's send it now to Christina Partsenevelos. She's back for a look at the biggest names moving into the close. What do you see?
Box shares. Those are soaring right now, hitting an all-time high after the cloud storage company beat on earnings and revenue for the quarter, also raising its forecast for revenue for the full year amid this growing demand for its AI-driven offerings. And that's why you're seeing shares up 17%, its best day since 2020. There's a leadership shakeup providing a boost to shares of Vail Resorts. The company said former CEO Robert Katz would return to the role effective immediately, replacing Kirsten Lynch. It comes just really after a tough year for the resort operator, where it sold fewer season lift tickets. Some say because of prices. Shares up 9%.
All right, Christina, thank you.
And Angelo, at the same time, Jensen Wong, CEO of Nvidia, has argued that if you don't compete head-to-head with a lot of these in the China market, that you open the door for other competitors who might have an inferior product to step in. Does that hold here as well? Hold on. Nvidia results are out. We are going through it. We're going to have to interrupt you, Angelo, with that as soon as it's ready. But what your thoughts on this situation as it applies to Nvidia and the design software players?
Yeah, no, I mean, listen, I actually agree with Patrick in the sense that it probably took longer than I thought for this to actually come down. And I wouldn't be surprised, if part of this was for trade bait, and if we, potentially see them get even more aggressive, maybe even on the chip equipment side of things. But we'll kind of wait to see how that all plays out. But no, I would agree with the context in the sense that, hey, listen, if you're empowering some of these Chinese players, specifically Huawei, in many respects, you're doing Nvidia a disservice. But also in the same respect, if you're not selling, or if you're preventing some of these, the EDA software from going into China, now that does crimp some of the competition or competitive challenges out there for Nvidia. So it could also be a positive out there for Nvidia.
So, Pat, we're still doing some tap dancing here as we go through these numbers and what's expected to be a perhaps somewhat noisy quarter for Nvidia, since we know that they took a charge, a $5.5 billion charge tied to China and those H20 chips. The counter to this is the fact that the Trump administration is opening up other markets with deals, Saudi Arabia and some of the sovereign AI deals that maybe had been gridlocked before now. How much does that offset some of this disentangling we're seeing within the Chinese market?
Yeah, I think those details should come out in the call, because NVIDIA has been pretty mum on everything it announced in the Middle East. There were some dollar figures.
Okay, we've got the numbers, Patrick. Hold on one second. Let's get to NVIDIA and Christina Partsinevelos.
Everybody's cheering here, but we are getting a beat on the top and bottom line. 96 cents adjusted. The street was anticipating 93 cents adjusted. That was wavering just over the last few days, so it is a 3-cent beat. Revenues $44.06 billion, slightly higher than what the street anticipated. To your point about the write-downs, as a result of these new requirements, NVIDIA has incurred a $4.5 billion charge in the first quarter. Remember, they said that they were going to take a $5.5 billion, so possibly some more details coming as to when the rest of that will be hit. But and then data center revenue, because that's an important factor for their revenues, $39.1 billion, which was a little bit light of the street estimates on FactSet, guys. And I'll come back with a little bit more details on Q2 guidance.
Okay, we'll be ready and waiting. In the meantime,
hello, everybody. Welcome to Blue Cloud Trading. My name is George. It is Wednesday, 4:31 p.m., May 28th, and NVIDIA just came out with their earnings results. Let's take a look real quick at the charts here. We're looking at a daily chart right now. We're going to switch it over to post-market. And you can see right now it's up 2.14. It's actually moving still. Here's a 5-minute chart, and we can see after 4 p.m. here, the results have led to an increase in the price of NVIDIA. One of the things I also want to cover in this video, we're going to look at the indices today, how they closed. At the end of the day, they were all down, as you can see. So the Dow Jones closed down 0.58%, the NASDAQ down 0.51%, S&P 500 down 0.56%, and the Russell 2000 was down 1.05%. Here's the heat map. You can see that at the close, NVIDIA was down 0.51% prior to the earnings announcement. You really never know how things are going to go, right? Broadcom was up 1.6%. Oracle was up 1.2%, but Tesla was down 1.65%. A lot of the healthcare stocks and utility stocks and basic materials, you can see there, a lot of the industrials and consumer defenses, they were all down. Now there's a cool feature here that I have on FinViz Elite. I'm going to switch this to from the closing prices to the after hours, and let's see how the markets, how these S&P 500 stocks are performing after hours. We already know that NVIDIA is going to be up, but let's take a look. So I'm going to click on this after hours performance, and there you have it. So everything is starting to look more bullish, right? Not everything, but I mean the majority of the stocks, like Nvidia is right now up 2.6, and Broadcom is up 0.66, Tesla is up 1.06. Let's look at the groups. Now today, this is the one-day performance, and you can see that the real estate was, didn't go drop as much as utilities. Utilities was down 1.44%, the entire utility sector. And then you had consumer cyclical, down 1.05, and basic materials down 1.01. Here's the 1 week performance. Communication services has been the leader this week, up 1.64%. So here's what we're going to cover right now. We're going to go over the indexes. Okay, we're going to take a look at those at the end of the day, how they closed, including the VIX, which is up 1.74%. We're going to take a look at the Mag 7 stocks as well. So we got those right here. We'll take a look at, of course, again, we're going to look at Nvidia a little closer after hours, and then some of the strongest sectors. And we'll also cover this members only request, JP Morgan. All right, so let's take a look at Dow Jones. Here it is on the daily chart. You can see it's still under the 200-day moving average and still holding right between the Tenkan, the 9 period, and the 200-day. So it's kind of stuck in there. Nothing to do really except for, hold on to your position at this point, really. FEZ is the Eurostoxx 50 ETF on the daily chart. It just dropped a little bit under the Tenkan and closed down 1.20%. But when we look at the overall pattern, it's still very strong. I just wouldn't be adding positions here. Whenever I see price getting under the Tenkan, I'm not adding new positions. I'm looking to either reduce positions potentially, or I'm just going to wait it out, because right now we still have some support here at 57.67, and that's based on that prior high. So as long as it stays above that level, I'm really comfortable with FEZ. IWM is the Russell 2000. This one's come up to the 209.27, then retreated. You can see that it came up kind of close and then dropped down to the Tenkan. So today was just not a big trading day. Everything has been sort of stuck in a consolidation now for multiple, like a couple of weeks now. You can see that right there. How about the QQQ ETF? Same thing, still stuck in that consolidation zone, down 0.44%. But of course, now that Nvidia came out with their earnings, of course, that's what we've been waiting for. If I just look at the Qs right now and click on the post market button, you can see it's up 0.10% after hours. So that's why I think that there's a higher probability that tomorrow morning we're going to see, the stocks up. Okay. Let me get back to that now. But when analyzing stocks and ETFs, it's always important to analyze the closing prices. That's the most important thing. Here's the S&P 500. That one was down 0.58%, and the VIX was up 1.74, but still staying under that 200-day, so that's good. It wasn't a big jump. All right, and now let's look at the Mag 7 stocks, and let's start off with Microsoft. Still, it was down 0.72, but still holding up above the Tenkan, the 9 period. It's above the 456.16 level. That support level goes back to right there, 2024. Okay, December 12th of 2024. So it's holding up above those levels. That's important. Let's do Nvidia last because I want to see how that's looking in a few minutes from now. Google. So Google right now is above the Ichimoku cloud. All right, it is above the cloud, and that's the first time actually, because yesterday on Tuesday, May 27th, it closed inside the Ichimoku cloud. This is a really good sign that we're starting to show some strength. The only problem is it's a reversal candle. All right, so when you get a reversal candle, just don't expect that this is definitely going to pop. Now, the Nvidia news though, let's take a look at this post-market action. I'm curious to see how it's looking after hours. And there you have it. It's only down 0.07. So that's why I'm saying tomorrow is going to be an interesting day in the markets. Here's Tesla. That was down 1.65%, but post-market, you can see it's jumped up a little bit, right? So that's interesting. Amazon is still holding above the Tenkan, above the 200, above the Ichimoku cloud. That's good, but it was down 0.63%. Apple still stuck inside the cloud. Now it's under that trend line. Okay, that's not good. This trend line goes all the way back to this date right here. If you look back to this date, it was February 25th. And price touched that level again right there on May 1st, 2025. So we developed that long trend line. on the daily chart. It popped through it, but didn't really materialize into anything. You can see here it just kind of was stagnant and then dropped back right back under. So no momentum here with Apple, obviously. How about Meta? And Meta is looking stronger today. It popped 0.23% at the close, at the closing price above the Tenkan-sen. So it looks pretty strong on the daily chart. But what about the weekly? Weekly is not quite that bullish yet because we still have the faster moving average. The 9 period is still under the 26 period. That's generally not an ideal ultra strong bullish trend. In fact, you can see that we broke through that prior low right there. That's what weakened Meta. Right now, it is starting to show a little bit of strength. Let's look at this on the 2 hour. Here it is on the 2 hour. You can see it's kind of sideways action right now. Okay, and let's take a look at Nvidia once again. Now we're going to look at Nvidia on the 2 hour time frame, and we're going to throw on the post market. So remember, on the 2 hour time frame, right? Nvidia was just kind of stagnant, waiting for those earnings announcement to come out. Now that price has gotten through, what's it look like? There you have it. So it broke through that consolidation, right? And now it's more than likely, of course, to expand. Where's the next level of resistance? At 152.89. What's that derived from? If we go back in time a little bit, you can see these levels. See how price got stuck right there back in sometime in November, it looks like, of 2024, and then again around January something in 2025, right? So it found resistance there once, twice, and then dropped. Let's go back a little further. Yeah, so those are the highs. The 152.89 level is the highest level Nvidia's ever reached. So that's, I think, where we're heading now, with at least for this stock. Okay, we'll take a look at that again towards the end. Let's see where it's at, because it's up 3.29%. You can see it's all changing because it's post-market, right? That's the key thing to keep in mind. All right, so let's switch it back to regular and go back to the sectors, and you can see GDX up 1.17%. Whenever the markets are down, usually gold and the gold miners ETF does pretty well, and it's looking very strong still. I like that on the 2 hour. Here's the daily time frame. All right, not too bad. XLI on the daily time frame still holding up above the Tenkan-sen, but it was down 0.5%. Bitcoin, you can see here retesting that Tenkan-sen at the closing price. I wonder how it's reacting to Nvidia's announcement. So let's switch it again to the post market, and no change there. Okay. XLC is the communication services sector. That was down 0.02% today, but it's still looking pretty strong, right? Like I said, it's one of the stock ETFs that's done pretty well because it broke through this prior high of 121 back here on March 26th. That's the high from March 26th. It broke through that right here on this little candle, and now it's starting to recover. IBIT is the Bitcoin Trust ETF for those who want to trade Bitcoin using an ETF. This is one way to do it, and you can see that right now we just came right back under that 61.75. So we reached an all-time high in IBIT back here on this little reversal candle, that spinning top. That happened on May 22nd, and this led to a continuation down to the downside. Now what's happening essentially is it's finding support at the Tenkan-sen. So we'll see if it can bounce here. And this is what the 2 hour time frame looks like for big IBIT. You can see it's under the Kijun-sen now, okay? It closed at least. All right, let's go to XLU utilities. That dropped 1.40%. But utilities in general has done pretty well, right? It's one of the strongest ETFs, in my opinion, when you compare it to a lot of the other ones out there. So that's good. Now let's take a look also at the 2 hour on utilities. Yeah, so it's retesting the bottom of the cloud. So we'll see if it can bounce here. But we do, it looks like we've just developed a little, on the 2 hour at least, it looks like we developed a lower high on the 2 hour from the prior one. But we still have a higher low. Okay, so we don't have a downward trend on the 2 hour yet. On the daily time frame, it's still very strong, okay, except for the fact that it's under Tenkan-sen. And GLD, which is the gold trust ETF, it's stuck in between the two moving averages. It's still in this little downward channel here, but this is, in my opinion, it looks more like a bullish flag type pattern. I think it's more likely to turn into something very bullish soon. And it's a place to be if you feel like, hey, the markets might. It's sort of an insurance policy is the way to look at it. With the U.S. dollar dropping, gold has been rising quite a bit. It's a place where other foreign countries are, buying up gold a lot more than they are U.S. dollars at this time. So that's part of the reason why this is pushing the price of gold up. All right, and then let's, I can kind of scroll through the rest of these ETFs. XLB, for example, on the daily chart, it's above the moving averages, except for the Tenkan actually, but it's under the 200. And on the weekly chart, it still looks pretty bearish, right, under the Ichimoku. USO is under the Ichimoku cloud on the weekly. SMH is struggling here, but let's see, did it pop through today? Let's look at the post-market. And the answer is yes, right? With Nvidia coming out with their earnings, the semiconductors ETF popped its head once again. It was just back on May 16th that it was popping its head right there, pulled back. I think now we might see a continuation with SMH. It's still above the 200-day moving average on the weekly. On the daily chart, it's looking pretty bullish. And of course, on the 2-hour now, post-market, it's looking pretty good. So we'll see what happens with SMH. XHB, but the weekly chart, remember, it's not 100% there yet because we've got the Tenkan under Kijinsen. It's not a perfect chart, but it's starting to show some strength. XHB is under the cloud on the home builders. That means it's bearish, right? Remember the rules of Ichimoku, the indicator that I'm using. If prices are under the Ichimoku cloud or inside the cloud, you really don't want to be adding new positions at that point. It's not technically sound. The rules of Ichimoku state that you should only be buying stocks when price, gets above the moving averages. Both the Tenkan and the Kijinsen, like it did right there, for example, is above the Ichimoku cloud. Ideally, you want to be above the 200-day moving average, which is that dotted yellow line, and then you can see the nice move up there, right? And then you're going to have these little pullbacks sometimes, and then some continuations. But this is ideally what you're looking for. If you're going to buy a dip, it makes sense to buy dips after a pullback when price is above the cloud. I never buy dips if price is underneath the cloud. It just doesn't make any sense. All right. Real estate on the weekly chart is inside the cloud, so I'd stay out of that. Here, the U.S. dollar still under the 200-day. Not looking good, right? Looking weak. And consumer discretionary is above, but Tenkan is under the Kijinsen. Chikuspan is underpriced still on the weekly, and on the daily, it's starting to show some strength. Maybe we'll start adding this as one of the things to look at soon, but I think until I notice that maybe we'll wait until next week for this one. I don't know. Healthcare, not looking good on the weekly chart. You can see the Chikuspan is underpriced. That's the closing price right there. If it's under projected 26 periods ago, so there's the price 26 periods ago. If that white line is under the candle 26 periods ago, that's bearish. We're also under the 200-day moving average. So it's not really a place to be buying like just the ETF. You will find some strong stocks within this ETF though. All right, so if you want to have diversification in multiple sectors, that's okay to buy a stock that's in the healthcare sector. Just be I wouldn't just buy the whole entire sector, if that makes sense. XLP, consumer staples, also just kind of stagnant right now. Tenkan is under the Kijinsen. Chikuspan is under price. You see that right there. So no on that one. XLK, also Chikuspan is under price. Price is above the cloud, but Tenkan is under Kijinsen. It's not quite there yet. So technology needs to get above 241.88. In my opinion, it would make more sense to get long once it breaks through those levels. It will show some strength and demand for the technology stocks. Financials also kind of stalling right there. You can see it's almost kind of building a little bit of a head and shoulders pattern. Here's the head right here. There's the lower shoulder and the other second lower shoulder. So that could end up going bad here for the financials potentially. Negative DI is still above the positive DI, so that's not good. Okay, you can see that on the weekly chart. On the daily chart, it's been looking more bullish, but again, finding resistance at these levels. Energy, here's the daily, here's the weekly, not looking that great here, but finding support at the 200-day. UNG, stuck inside the cloud. Natural gas and copper is still under the cloud. Let's look at JP Morgan. So I actually have a position in this. I shouldn't be talking about this. So I added this one. I mean, I'll just talk about it because I forgot that I had that in my portfolio, and I did add this back on May 13th, and basically I'm still holding onto this position. So just for you members out there that request stocks to be analyzed on the show, just remember I only cover the members only, the stuff that's in the portfolio on the weekend members only video. All right, that's just for members. And any of you who are interested in becoming a member to get access to those videos, all you need to do is go to my Blue Cloud Trading page here and click the join button. It's free to subscribe, right, to the channel, so you can watch future shows that I post here. But if you want to access these member-only videos down below, if you scroll down, you'll see these here. To access these, you do need to become a member. You'd have to become a Blue Cloud Trader, either Blue Cloud Trader level member or Blue Cloud Legend level member. The difference is under Blue Cloud Legend level member, you'll also get access to my daily trade updates, okay? And those I post basically once you've become a member, it will pop up a new tab over here and it will show up as memberships. Let me just show you what that looks like right there, membership. So you click on that and then you'll see the posts in there. All right, so let's get back to JP Morgan. I'll just go ahead and do this one. So right now, here it is on the weekly chart. You can see that it is above the 254.31 level. That's the level that I was watching. It's a daily level that I was watching. It was going back to that candle right there on March 26th. And so I had added the position right there on May 13th. It's pulled back a little bit and now retesting the Tenkan-sen. It's still looking pretty good. It was down 0.68%, but nothing to be too concerned about here. Here's the 2-hour time frame. It's still holding up above the Ichimoku Cloud. Tenkan-sen is above Kijun-sen. And so it is a position I'm still holding on to. Guys, thanks for watching. If you want to support the channel, hit the like and subscribe button and help me reach 20,000 subscribers. We're almost there. Okay. Thanks a lot. Talk to you all later.